Earlier, FedEx has challenged the New York Times to debate, a public one, after the paper published its $0 tax bill on the front page. FedEx argues that the lower taxes go, the more money it can invest in the U.S. economy. But as the Times points out, much of FedEx savings has been spent on stock buybacks. While this is great, of course, for shareholders and those 401ks, the promise of the tax cuts was to create jobs, remember, and increase wages. FedEx says it's not spending more on business investment because of the slowdown in global trade. Austan Goolsbee is in Chicago. He was the chair of the White House Economic Advisory Council under Barack Obama. And Professor Goolsbee, this is your opportunity to say, I told you so. I quote you from a few months ago that you weren't surprised that there wasn't this investment from any company, let alone FedEx. You say there wasn't much pent-up demand for investment after years of low rates, accelerated depreciation, etc., etc. Okay. There is a big debate about this in economic departments like the one that you work in. Having said that, if we put the investment aside, did the tax cuts work, though, when it came to things like pensions and wages? Does FedEx have a point? Did they invest in something?
Look, I don't know FedEx's particular case. But no, I don't think there's even much of a debate in economics departments. I think the economists look at the data, and it's quite clear it didn't increase investment, it didn't increase the growth rate, it did not lead to big increases in wages. Remember, it was sold by the Trump administration that was going to raise average working people's wages by $4,000. It did not do any of those things. And that's why, I mean, it's in a way, it's sad for the CEO of FedEx that people are going to take out their frustration on him and on that one company. This is a much wider issue where if FedEx's situation is as described in the New York Times, that's just absolutely the quintessential thing that happened. We had a $2 trillion tax cut that they said was going to increase investment, and investment is now literally lower as a share of the economy than it was before they even passed the tax cut, and the growth rate is currently forecasted to be coming in the 1% at an annual rate. So there's a reason this is the most unpopular tax cut in the history of American polling. And that reason is because people can see it cost $2 trillion and it didn't do any of those things.
And this brings us neatly to Tax Cuts 2.0, which, you know, we had Kevin Hassett, who was a former economic advisor to Donald Trump, saying, yes, this is going to be a reality of the 2020 campaign. And Donald Trump is going to bring in another tax cut. At its core, apparently, is going to be another corporate tax cut. What do you think this will do, basically, to, well, the debt and deficit in the United States, to name one? But how do you think it will further distort things?
Well, look, how do you, my first reaction is, what? You know, how do you look at the $2 trillion tax cut we just did, where the vast majority of the money got paid out, not in investment in building factories, not in raising the growth rate, not in raising wages, but instead in share buybacks that went to shareholders and executives getting higher pay? How do you look at that and say what we need is more of that? I think there won't be a tax cut 2.0 of that same form because I think they're going to realize this is a great vulnerability, political vulnerability for the president as he runs into his election. You've seen in manufacturing, we're now in the 4th month of contraction of manufacturing in the U.S. Not that it's the Trump administration's fault. There's a slowdown in manufacturing going globe-wide. But I think in the face of that slowdown, the argument that the Democrats are clearly going to make is they're going to go to Michigan and Wisconsin and Pennsylvania and Ohio and a series of industrial states that are closely fought, and they're going to say, Donald Trump gave $2 trillion to his friends, and they did not pass the savings on to you. And like I say, I think that's going to be a vulnerability. So I think you're likely to hear less and less about tax cut 2.0.
Yeah, understood. To be continued in a conversation you and I will have. You know, there's going to go back into those swing states and hear a lot about the wealth tax, and they're not going to be so keen on that either. But Austin, we'll get back to all of that.
That might be true.